Hello friends. Friends, we'll continue with cash flow statement. And in the last lecture, we started with cash flow from investing activities. Right? In the last lecture, we started with cash flow from investing activities. Right? So what is cash flow from investing activities? Cash flow from investing activity means acquisition and disposal of fixed assets and investments. So I can say it is related to purchase and sale of fixed assets and long-term investments. Clear? Excluding marketable securities. Why? Because these marketable securities can be freely traded in the market. These are not long-term securities. These are short-term securities, short-term investments. Clear? So the investing activities relate to the purchase and sale of fixed assets and long-term investments excluding the marketable securities. Second thing is, it also deals with loans and advances given and their repayment. Right? Any loans and advances, you have surplus money. So what is the basic aim of investing that money if you have surplus money? To earn income. So in place of investing in some shares or debentures or anything, you give a loan to a person who needs money and he decides that he will pay you interest. So ultimately your aim of investing in some shares or debenture is fulfilled by giving the loan also. Right? Your main aim is to earn the money. So you are earning money here. Clear? So cash flow from investing activity also involves loans and advances given and their repayment. Then any income earned on investments. Clear? Any sort of income that is earned on investments, like dividend on shares, interest on debentures, interest on any other investments. Right? Then rent on property which is kept as investment, that is also an income. Clear, friends? Now, so the basic thing you know is that in investing activities, we are dealing with the fixed assets and the long-term investments. Right? So in case of investing activities, we will prepare fixed asset account. We will prepare fixed asset account. Why we are preparing the fixed asset account? The first thing you will be given is balance brought down, that is the opening balance of fixed asset. Right? Then you will be given the closing balance of fixed asset. Right? Then you will be given some more information regarding the fixed asset, like we sold some fixed asset during the year. If we have sold some fixed asset, so I will say by sale of fixed asset. Now on this sale, there might be a gain or loss. If there is a gain, I will say to gain on sale. If there is a loss, I can say by loss on sale. Clear? You might be given the information regarding the depreciation also. So I will say by depreciation. Right? Now, whatever the balancing figure you get, in 99% cases, you will get the balancing figure on this side. You will get the balancing figure on debit side. If this is a balancing figure on debit side, right? What does this signify? If there is a balancing figure on the debit side, it signifies the purchase of a fixed asset. Because we are debiting the fixed asset account, means our fixed asset is increasing. So I will say to bank account, this will be your balancing figure, and this will reflect purchase of asset. Clear? So basically, why we prepare the fixed asset account is, we prepare fixed asset account to identify the amount of purchase of asset during the year. Clear? This is the main purpose of preparing fixed asset account. There can be a balancing figure on the other side also. In that case, it will be a sale of fixed asset. Right? So, make notes regarding this. Fixed asset account is prepared. Fixed asset account is prepared to identify any sale or purchase of fixed asset that is not given directly in question. Okay. Clear? So we are finding out the missing figure basically in the fixed asset account. The missing figure can be the purchase of fixed asset, which will be in the 99% cases, it will be the purchase of fixed asset. On the other side, it can be the sale of fixed asset also. Clear? So debit side balancing figure it shows the purchase of fixed asset, and credit side balancing figure means sale of fixed asset. Clear? If you are getting the balancing figure on the debit side, that means the purchase of fixed asset, and if it is on the credit side, that means the sale of fixed asset. Right? Now you know why we prepare fixed asset account. It is to identify any sale or purchase of fixed asset during the year which is not given in the question. Debit side balancing figure, purchase of fixed asset; credit side, sale of fixed asset. Clear, friends? I hope this much is clear. Now, what is relevant for investing activities? If we consider from the point of investing activities, which entries we will take? We will take sale. We will take this. We will take purchase. Right? Gain on sale or loss on sale? No. This will be in operating activities. Right? Depreciation, again operating activities. So what is relevant from fixed asset account is the sale of fixed asset and the purchase of fixed asset, because this is what we are dealing in cash flow from investing activities, purchase and sale. acquisition and disposal of fixed assets and long-term investments. Clear? So let's do one problem on this. Let's write down the problem. Right? We have a plant and machinery. We have a plant and machinery. Note down this example, okay? This opening balance is given and closing balance is given. Opening balance is 8,60,000 and closing balance is 9,50,000. Clear? We are given depreciation during the year was 40,000. Clear? There is a sale of plant at the beginning of year. There is a sale of plant whose book value was 20,000 and it is sold for 25,000. Clear? Now this plant and machinery's opening balance is given, closing balance is given, depreciation is given, and it is given that we sold some part of the plant whose book value was 20,000 and it is sold for 25,000. So we can prepare the plant and machinery account. Right? See, if you have any information regarding the selling or purchase of fixed asset, you have to prepare that fixed asset account in case of investing activities. Clear? So we have the opening balance. I can say to balance brought down. What is the opening balance? 8,60,000. We have the closing balance, which I can write down as by balance carried down, that is 9,50,000. What is the depreciation charged during the year? 40,000. So I can say by depreciation 40,000. Right? Now there is a sale of plant for 25,000 whose book value was 20,000. We will record by sale of plant 25,000, and there is a profit of 5,000 on this sale because the book value was 20,000 and it is sold for 25,000. So I can say to gain on sale how much? 5,000. Anything else? No. Now you can see this credit side is more than debit side, isn't it? This credit side is more than the debit side, which comes to 10,15,000. What is the balance on this side? This balance will reflect the purchase of plant and machinery during the year. So we'll say to bank account, this is 1,50,000. This comes to 10,15,000. Clear? Now if you have to prepare cash flow from investing activities, cash flow from investing activities, right? This will involve the two things we have to follow. What are the two things that we will pick from plant and machinery account? One is the purchase and second is the sale. Depreciation we will take in operating, gain on sale we will take in operating, right? So cash flow from investing activities, we will say sale of plant and machinery, $25,000. This is cash inflow for you, right? Then you have purchase of plant and machinery. This is 1,50,000. So that means your cash outflow is more than your cash inflow. So you have a negative cash flow from investing activities to the extent of 1,25,000. Right? This is cash flow from investing activities. Clear? So you have a negative cash flow from investing activities because your cash outflow is greater than cash inflow. Clear? So this is how you are going to deal with the fixed asset account. We have to find out the missing figure of either the purchase of fixed asset or sale of fixed asset. In 99% cases, it will be the purchase of fixed asset. You will be given the sale of fixed asset. On that, you will find out the gain or loss. Depreciation you will be given, right? Then you have to find out the purchase. Clear, friends? Now, one important point here is, if you see the provision for depreciation or accumulated depreciation account, provision for depreciation or accumulated depreciation account appearing, right? As we have discussed in operating activities, that if you have provision for depreciation or accumulated depreciation account appearing in the books, then that means the asset is shown in the book at cost value, right? And the depreciation over the years has been charged to provision for depreciation account, right? So the journal entry for that is provision for depreciation or accumulated depreciation account debit to fixed asset account. Clear? So now when you are preparing the fixed asset account for, in case of investing activities, again you will have to prepare two accounts, that is the fixed asset account, right? In the fixed asset account you will have the opening balance to balance brought down. You will have sale of fixed asset, sale account. You will have depreciation by depreciation. You may have loss on sale, right? By balance carried down to gain on sale and to bank, which will be the balancing figure. This is what we have done in fixed asset account, right? But in this case, the fixed depreciation is not charged to depreciation account, but it is being charged to accumulated depreciation account. So in this case, we will take accumulated depreciation account, right? In this case, we will take accumulated depreciation account and not the depreciation account. And then after that, we will prepare accumulated depreciation account or provision for depreciation account. It is the same thing, right? Here we will take by balance brought down. You will be given the balances of accumulated depreciation or provision for depreciation in the books, right? So here this entry I will take on this side. So I'll say to fixed asset You will be given the balance carried down. To balance carried down. And the balancing figure, can you tell me what will be the balancing figure of accumulated depreciation account? That will be by depreciation charged during year. Clear? So in case you see the accumulated depreciation account in the books and the fixed asset is shown at cost, then you have to prepare these two accounts, the fixed asset account and accumulated depreciation account. Although if we talk from the point of view of investing activities, only the fixed asset account is relevant, because what we have to pick here is the purchase and the sale, nothing else. But if you get a full-fledged question where you have to do the operating activities also, investing also, financing also, then you will have to, you need this figure, right? You need this figure, you need this figure. So in any case, even in case you get the question on investing only, you have to prepare both the accounts, fixed asset account also and the accumulated depreciation account also. Clear, friends? So this is regarding the fixed assets while dealing with investing activities, that we have to find out the missing figure in fixed asset account, that in 99% cases will be the purchase of fixed asset. Clear? I hope it is clear to all of you. Still, if you have any queries, feel free to email me at ksjteaching@gmail.com, right? If you have any queries, any questions, you want the solutions, just send me the image of the question and I will send you the solution, right? In the next lecture, we'll be doing practical problems. We'll be doing practical problems on investing activities. Clear? So that's all for this lecture, friends. Thank you so much.